Good morning. Welcome to this discussion on investment vehicles. And today we're going to talk about government securities. What you are looking at right now is the Bank of Zambia website, and I'm currently using my phone, which is a very simplistic device, and I'm still able to access the website, which means this is something that can be done by pretty much anyone that has a smartphone, a tablet, laptop. And if you have got no access to these things, you can simply walk to Bank of Zambia and they should be able to assist you in how to register as well as be able to partake in these government securities. So the question now becomes, what are government securities? Government securities are simply vehicles or means by which the government raises money. And how they raise money is by borrowing from the environment. So an individual, a company, or another government would be able to lend money to the government and in the future get a return on those investments. And these securities that the government issues are in two forms. There is a treasury bill as well as a government bond. So treasury bills are short-term in nature, meaning the maximum that they go is 365 days, which is 1 year. And the minimum tenure that you can invest in the treasury bills is 90 days. How the treasury bill works is the government is going to issue, say, a treasury bill for 1,000. How the individual or the company or whoever is lending this money to the government is not going to lend the 1,000 to the government. You are going to lend the government, say, 900 kwacha. And then at the end of the tenure, when it matures, that interest that is shown is what is going to move the amount that you had invested to the amount that you're getting paid at the end. So that 1,000 that you get paid, that 100 kwacha is the interest that you are earning on that treasury bill. Only that at the end of it all, you're not going to get the 100 kwacha because there is a 15% withholding tax as well as a 1% handling fee. So the total that is charged in taxes on the treasury bill is 16% of the interest component, not the principal amount, but just the interest. And then the second, more long-term way that the government borrows money is through government bonds. So a bond has similar characteristics to a treasury bill, only that it is always sold, like a treasury bill is always sold lower than the maturity amount, but a bond can be sold to you at a lesser amount than the maturity amount. It can be sold to you at an amount that is the same with the maturity amount, and it can be sold to you at an amount that is even higher than the maturity amount. Those are the terms you hear, that it's sold at a discount, a premium, or it's sold below or above the par value. But how does one make money off of a bond? So bonds give you two ways of making money. One, you're going to get interest on an annual basis that is paid every 6 months, which is called a coupon. And on top of that, there is going to be a yield, or the interest that you are going to be paid at maturity. And this is what then moves your bond from the amount that you bought it at to the amount that the government will give you at the end of the maturity. For example, a bond that you are buying today, say like the last tender that took place, should have been like 53 kwacha, somewhere there, for a 15-year-old bond. So if you pay today, you pay a 53 kwacha for every 100 kwacha. So you pay 53 kwacha today, but after 15 years, the government will come and pay you 100 kwacha, meaning that difference between the money you're buying now and what the government will give you is the interest component or the yield that you would have made on the bond. But on top of that, every year the government will be paying you a coupon at a percentage that is quoted at the beginning of the bond. So that's how you can make money off of bonds as well as treasury bills. You lend money to the government and the government will pay back that money, one, with interest as in terms of the interest on treasury bills or the coupons on the bonds, as well as the interest that you get between the difference of what you invested and what the government gets to pay you at the end of it all. The beauty about government securities is their safety, in the sense that once you invest in a government security, I know there are defaults that can happen, but the government will always pay. Unless Zambia stops existing, for example, is when Zambia can fail to pay you. But eventually they are going to pay you. If they struggle to pay you, they'll borrow some more in order for them to pay you. So you still get your money. It's just that you have to factor in things like inflation, as well as interest rates around and other opportunities where you can make a higher return compared to government returns. But when it comes to the government securities, the interest or the earnings that you make are pretty much guaranteed. That's why they are called risk-free returns. Now, how can an individual participate in this whole investment in government bonds? So the way you participate is simple. You go to the Bank of Zambia website. Down there you have Bank of Zambia online. But if you want to find out on how bonds and everything are calculated and the like, you can go on bonds and treasury bills. It has all the information that you need in terms of the bonds, the treasury bills, what are they, how do they operate, how do you calculate the interest, when are the tenders, how are the tenders done. So in relation to bonds and treasury bills, if you want to partake or to participate, there are certain minimums that apply. So for bonds and treasury bills, the minimum is 1,000 kwacha, and each share or each amount comes in 100 kwacha values. So but the minimum you can buy or you can lend the government is the 1,000 kwacha. So they come in 1,000 kwacha terms. So once you have a 1,000 kwacha, then you can lend money to the government. But you cannot dictate the interest that the government will be paying you if your amount is 100 or is 1,000. What that means is you fall under a category that is called a non-competitive bidder, because the government borrows money through bids, and you as the public are going to make bids telling the government, this is the interest rate that I want to earn on my money. So now, if your money is less than 500,000 kwacha, then you can not give the government the interest rate that you want to borrow, to lend them at. It's the government that will tell you the rate that they are going to borrow that money at. So you are a non-competitive bidder. But if the money you are lending to the government is 500,000 kwacha and above, then you can tell the government the interest that you are looking for. And it's then up to the government to accept that interest. So that's the difference between a non-competitive and a competitive bidder. So once you want to invest in these government securities, you need to have an account. And this account, to open this account, you go to the Bank of Zambia website. You have Bank of Zambia, BOZ Online. You click on BOZ Online, you're going to have Government Securities Online. So once you click on Government Securities Online, it's going to take you to a separate website that is managed by the CSD of the Bank of Zambia. So for me, I have already logged in, I've already created an account, and everything has been set up. But once you come to this window, it's going to ask you, on the left side, you have consultant, or you have the calculator, CSD individual, CSD company. So if you are an individual, you click on CSD individual. Once you do that, it's going to bring you these details where they are looking at the application type. Is it an application local, or are you a foreigner? What's the account type? Is it a joint? Is it a single? Or is it a trust account? So you put in all this information. Once you are done, The next tab is going to be about the bank details. The bank details are that you need to have a local bank account in the local currency. That is the account that Bank of Zambia is going to be paying in those coupon interests, as well as it is the account where the Bank of Zambia is going to be getting the money once you are lending that money to them. I know there's a second option in terms of lending money to Bank of Zambia where you can deposit the money directly to the current account of Bank of Zambia as you are putting in your bids. So once you put in your bank account details, you are going to go to the survey tab. So now under the survey tab, it's just asking you, how did you know about this CSD and all that stuff? Now, there is an error on the Bank of Zambia website in this regard, in the sense that there's a pop-up. You know those contact us. That pop-up, it's sitting exactly where you're supposed to click to go to next, which is documentation. So the trick around it is you have to minimize the tab. So the moment you minimize the tab, keep minimizing it until that contact us, the camera pop-up, will move away from where it is sitting, where you click next. So once you do that, then you can go to the documentation. Documentation, all they're looking for is your NRC as well as your photo. So you just take a photo of your NRC with your phone, take a photo of your face, and they need your signature. If you are doing a joint account for both signatories, they need both signatures to be on file. So how you do it is you get a plain paper and you sign. And then once you sign on that plain paper, you then take a photo using your phone of that signature. And that's the photo that you upload under documentation. Once you do that, it will take, they're quite efficient. Within 48 hours, maybe let's just give it, okay, I've seen it being done. Yeah, mine was done in less than a week. But some people, it has been done in less than 48 hours. So within 48 hours, you expect that your account is going to be opened. Once your account is opened, they're going to send you an email. So your email, you're going to receive an email which will tell you that your CSD account has been created and it's been approved. So once that is done, then you have your CSD account. And from that time onwards, because you put in your phone numbers and everything, Bank of Zambia will be sending you messages when the new tenders are going to take place. And all you do once you're interested in putting in your tender, then you go to your bank, get a letter saying, the letter to just say that once you win the bid, Bank of Zambia can get money from your account. And once you get that letter, you fill in the form with the tender details. This T-bill number 18 of 2022. You put in all the details, how much are you lending to the government, and with that letter from your bank, then you submit your bid. Once that is done, when you win the bid, Bank of Zambia will then get the money transferred from your bank into your investment. Then you have opened your account. So that is pretty much the process. If you have any questions, you can always be able to run you through, and you can always find that information also on the Bank of Zambia website. Now, this is one of the investment vehicles, and we're looking at making money out of it. So what strategy can you use? So I have devised a compounding strategy, and yeah, if you are interested, I can be able to send you this in Excel. So this one, I'm calling it the bond model. So up there, the current coupon rate, and this is for 15 years. I've put it for 15 years. So if you are just starting work, say you're 25 years, then you are targeting that by the time you reach 40, this is your strategy. I've put a 10,000 kwacha per annum, but you can use any amount, 1,000 and above, obviously. So all I'm saying is I'm putting in these amounts but placing them in bonds every year. So this is the bond strategy, and it's a compounding kind of strategy. So what it means is the first 10,000 is the money that you put in year one. So let's say we're now in 2022, and the whole lot of 2022 you've managed to save a 10,000 or a 1,000. Start of 2023 is when you put in your 10,000, but in a 15-year bond. So these are the 15 years that this bond will stay in this investment. When you come to year 2, you are going to get the coupon that you received in year 1, and you save another 10,000 for year 2, and the coupons you received in year 1 also add them to the bond for year 2. I know I've put just the 1,400, but here you have to maybe bump it up to make it 1,200, to make it 12,000 in year 2, so that it applies the 12,000, because you buy them in 1,000 amounts. So like each, yeah. Anyway, because they come in form of 100 kwacha, so this can still work. So in the 15 years, as you can see, the coupon rate is reducing, because we are taking it that you are targeting this amount, the total, to have in 15 years time. So the ones that are coming subsequently, you'll be placing them in bonds of a shorter tenure, so that this whole arrangement comes to an end in the 15 years. So you find that in year 15, the interest rate for a 2-year bond is like 9%, or you can put this amount in a treasury bill, not in a bond, so that it just runs for 1 year. And treasury bills currently, the interest rate they're giving is around 9%. So what this means is, for the 15 years, the money that you're going to save is going to be 150,000. But you'll be compounding the coupons that you are making in these years to be added on to the subsequent years. That's why you see, like in the 15th year, you are investing a 46,600, when in actual sense, from that year, you are only saving a 10,000. That's why the actual outlay is 150,000. So after 15 years, your total coupons are going to be 271,000. That's you saving 10,000 every year. So you can even make it 800 and something kwacha every month, and then at the end of the year, you should have your 10,000 that you place in January of that subsequent year. And then the cutoff price, this is the bid price that is given. So like the current one was at 51.455 for the previous bids. So for 15 years. So the government was getting the money from the public at 51 kwacha, and then after 15 years, the government was going to pay you the 100 kwacha. But every year they were going to pay you 14% as the interest. So the total that you will make on the first the first 10,000, at the end of 15 years, that amount is going to be 37,074. So if you use this strategy and you are religious about it, at the end of 15 years, the total money that you are going to get is going to be 788,477. This means that, as I said, the interest that you earn at the end when you are of the bond, that one is not charged with the withholding tax. Only the coupons, those 14% that you make every year, that is the one that suffers the withholding tax and the handling charge, which is the 15% plus 1%. So if you want to have a 788,000 after 15 years, this is one of the strategies you can use, and this is how you can therefore invest in bonds. You can invest a lower amount or a higher amount. If you are investing in 1,000, then this 788 is going to be 78,000 after 15 years. So, but you would have saved the 15,000 for you to make 78,000, and this is money that is safe, it's secure, there's no risk when it comes to government securities. Now, the issues that you have to factor in is things to do with inflation, as well as the change in interest rates in the future. So if inflation goes high, as in the next 15 years, if inflation is going to be higher than it currently is, meaning if costs of goods are going to be, say, 5 times more expensive than they are today, then that money, the value of the 788 after 15 years is not going to be the value that it is right now. So you can further discount these returns to bring in the time value of money, as well as factor in inflation, which I haven't done here. This is a simplistic approach, but at the end of the day, you are going to have 788,000 in 15 years time, and I should think that is still reasonable money, because when you reach that 15 years, you can then put the entire 788,000, maybe just add the 230 to it, 228 somewhere there, add to it, make it a 1 million. Then you put it in a bond for 15 years, meaning every year you'll be getting 140,000 for the rest of your life, and this therefore is money that can secure even the futures of your children. So those are some of the pitfalls that you have to look at. Or you also look at, do you have any other means that you can have a higher return than what the government is offering? But this can be used as one of your diversification model, where you have bonds as one of the investments that you have, and you also have other types of investments, because as I mentioned, we have 7 that we're going to look at, and there's also things to do with business and whatnot, which is not part of the investments. So this can be another part of you trying to diversify your portfolio so that your risk is spread out and you pretty much secure your future. Because I think at the end of it all, having a 788,000, if you are a 25-year-old, meaning after 15 years, that's when you're 40 years. When you're 40 years old, having 788,000, that is enough money for you to be able to build a house, start a business, and do other things. And meaning you can be able to retire with a bit of stability and whatnot. So that is what I wanted to share in relation to government securities. If you have any comments, you can hit me up in the comments. And if you want me to share these workings, these schedules, you can send me your email or WhatsApp line, and I'll be able to send them to you. Thank you very much for your time, and have a good day.